G'day everyone, Aussie Dollar Man here, and in this video I want to talk to you about how to spot a market turn. If you're new to the channel, I've put together a short playlist of videos so that you can get started quickly. Also, I encourage you to subscribe to the channel so that you can keep up to date with my latest videos. And if you do find value in them, I'd really appreciate it if you can click on the like button and leave a comment to say hello. It does help the video get out to more people. A quick disclaimer, this video is for educational and informational purposes only. It's not financial advice. Do your own research, trade responsibly. So the reason for today's video is that I recently put out a forecast for the Australian dollar, US dollar, that gave my predicted turning points for May of 2025. And we'll have a look at those in just a moment. But I realized not everybody has the experience or the skills necessary for trading them. So I've gone into my Gann and form reading work to pull out a couple of things that I think might help you. And by the way, that forecast video, which you can find on the channel, was published on the 30th of April 2025. So all of those May dates were published in advance. And as you can see here, the dates have worked really well. We had the 29th of April coming in exactly. Obviously, the 29th of April had already come and gone, given that I published this on the 30th of April. But the 2nd of May was the Friday. I was looking for the low on Monday, the 5th of May. That was one trading day early. But then the 7 May high and the 12 May low came in exactly. And you can see there that high, low sequence in the forecast. So as we approach dates like this, how do we actually spot that a market turn is in? Well, here are three things that you can look out for that can either tell you that a turn is in or that a turn is coming. The first one is an overbalance in price or time. This is a technique that W.D. Gann talked about. He mentions it in a few of his books, but more specifically, there's a lesson in his commodities course called Time and Price Balance, which you might like to take a look at. Then we have first higher bottom or first lower top trades. These are trading opportunities after the extreme turn has happened, but they can still be quite lucrative. And of course, my favorite, which are price clusters in the market. These can give you confirmation that a turn has happened, or when you're used to dealing with them, they can actually show you where the market turning point is going to be before it happens. And that's why price clusters are one of my absolute favorite trading tools. So we'll start by looking at overbalance in price and time. An overbalance is an abnormal move against the trend, usually running at least twice or 200% of the previous move in price or time. Gann tells us to watch both price and time. And if a market has been running, let's say down for a significant period of time, and then it puts in a strong move to the upside, if that move has run at least 200% of the previous move in the same direction, Gann would call that an overbalance, which is an early warning indicator that in fact the trend has changed. And that's how Gann filtered out small moves against the trend that were just pullbacks rather than a turn in the actual trend itself. By the time an overbalance comes, you know the turn is in, but it's actually too late to trade it, which is a little bit sad. However, after the overbalance, you often get what's called a retest, which can be just as good to trade, if not better than an extreme turn. Now, you don't always get the retest. Sometimes the overbalance happens and there's no real retest to trade and you just miss the move. And I'm sorry to say that even after 25 years of being around financial markets, I still am yet to find anybody who gets it right all the time. I nail some pretty impressive turns, but I miss a load of turns as well. At the end of the day, missing a turn is not a big deal. You just wait for the next date. You wait for the next price to come in. And if you can have the self-control to wait for those next trades and wait for those strong setups rather than chasing a setup that you've missed, then you have every chance of success in trading. Let's look at an example now. This was the 9 April 2025 low on the Australian dollar, US dollar currency pair. You can see down the bottom here, the move up out of that low was a really strong up move. And when we compare it to the last up move, shown by this red arrow here, you can see it's run past 200% of that move. So you take that move, you measure it out there. Once we've run double that move, that's a sign of an overbalance in price. You'd prefer to see it on the one swing. Here we did have a little swing down here, so technically that does reset the count just short of 200%. But in this case, I'm happy to call that an overbalance in price. In case you're wondering, I'm using TradingView software, and the tool is the trend-based fib extension tool. You'll find that in the Gann toolbar. Now, I actually released a video on that double bottom setup as it was unfolding. So on the 9th of April 2025, and I actually showed a trade that I had just entered. The trade went on to make 16 to 1 reward to risk in just 2.5 days. I've put that up there. It's one of the first videos that you'll see in the new to the channel watch these videos playlist. And the reason that I've put that particular trade there is to show you that it's often the simple trades that are going to reward you the most. And people want to get all fancy and complicated with Gann and have all these secret methods. And yes, Gann had a lot of secret methods and he hid them from the public. He coded them in Tunnel Through the Air, which you can see is another set of videos on the list there. But at the end of the day, a lot of the time, the simple stuff that Gann wrote about works fantastically well, and it's something that you can pick up and put together in, say, a weekend and start using in the market. So Gann is a long journey if you want to actually get in there and make money, without having to wait 10 years or 20 years until you've mastered Gann. I don't know anybody who's mastered all of Gann's stuff. There's so much there. But if you want to get going straight away, have a look at that video. The simple things in there, a simple double top, double bottom trade with a couple of little tweaks that I've put in there. You can get some pretty good returns there just using a simple system. Now, still on the topic of an overbalance in price, that overbalance can occur on any swing chart time frame. So I like to refer back to page 46 of Gann's second book, which was the Wall Street Stock Selector, where Gann lines up his swing charts side by side. You've got a yearly, monthly, weekly, and a daily, and you can watch all of those time frames for an overbalance to give you an indication. So if you see an overbalance on, say, the daily chart, you can then check your weekly chart to see, oh, is it in position for a turn in the market? And that combination of swing chart timeframes is exactly what I did in that double bottom video. So always make sure you're watching your charts on multiple timeframes. Let's move on now to the first higher bottom, first lower top. This is what's also known as a failed retest of the extreme high or low. So the high or the low have come in, they're gone, you've missed them, but then the market comes back and sometimes gets very, very close to that old high or old low before putting in a first higher bottom or first lower top. And that first higher bottom or first lower top does two things for us. Firstly, it can give us confirmation that the turn is in, and secondly, it can give us a trading opportunity as well. Gann actually referred to the first higher bottom and the first lower top as the safest place to buy or the safest place to sell. And there's a couple of reasons for that. Firstly, it gives you that confirmation, as I said, that the top is in. But secondly, sometimes the actual time cycle, high or low, comes in on the date of that first lower top or the first higher bottom. And that's where you want to be jumping in and trading anyway. So they're definitely very, very important to keep an eye on. And in that double bottom example on the Australian dollar from the 9th of April, there was actually on the hourly chart a first higher bottom that formed about 5 hours after the extreme low came in. Now, if you happened to enter at that 9th April low exactly at the low, a first higher bottom can be an opportunity to increase your position on the trade or to move your stop loss up to lock in some profit. And just on a side note here, for those of you who might be working jobs still and thinking that that's a disadvantage, well, in some ways having a job is actually an advantage because it keeps you away from looking at the market 24/7. If you look at the market 24/7 or 24 hours a day, 5 days a week, as most of the markets are open, you're going to go crazy and you're going to talk yourself into going long, short, long, short, long, short, and you can get into a real mess there. Sometimes it's good to be away from the market and then come back and have a look at it, get a snapshot, make your decision, and then go away, come back later. In this case, let's say that you missed the low there. Well, 5 hours later, you have another opportunity there. So if you see the low come in and you think, oh no, I've missed it, you can just check the market once every hour very quickly, and you can do that on your phone. 1, 2, 3, 4, 5. There's your first higher bottom on the hourly swing chart. And away you go. You've got a nice entry there. You can, as I said, add to your existing position or take a new position there. And that first higher bottom is confirming that market turn for you. As I said earlier, if we look at this example of the overbalance in price, that's confirming that the turn is in. However, at that point there, it's far too late to trade. So this is the kind of scenario where you'd have to hope that the market comes back and gives you maybe a 50% retracement. It doesn't always happen though. So that's why I'm always looking to get in earlier. So I'll look at my timeframes. If I'm thinking that I'm around a higher or low, I'll look for that first higher bottom or first lower top. And again, I'd encourage you to watch out for that on all of your swing chart timeframes. The third one there is my favorite, and that's the price cluster. On this channel, you'll often hear me talk about a ranges resistance card as taught by W.D. Gann in his book, How to Make Profits in Commodities. The lines that you see on a ranges resistance card, where we're simply dividing a range into 1/8 levels, those lines are one kind of price milestone. They are potential places where a turning point in the market may form. What a price cluster is 2 or more price milestones very, very close together. And I actually showed you an example of this in last Sunday's episode of the Forex Form Guide, which comes out every Sunday at 7 p.m. This 65.14 top on the Australian dollar US dollar for the 7th of May, where I was able to nail that top precisely and get in with a very, very small risk on the trade. And when you get in with a small risk, that's how you can get a large reward to risk ratio in a short period of time, as I showed you in that double bottom example that I spoke about earlier. Now, I'm not going to show you all of the price forecasting that I used for this top. I did give you some clues in that Forex Form Guide video. However, I will tell you the two places that you can go to find how to call tops and bottoms like that. The first on the left there is WD Gann's book, How to Make Profits in Commodities. There are three main techniques that I use in my price forecasting. You will find one of those described outright in that book, How to Make Profits in Commodities. However, if you want the full package stepped out for you, step by step, click here, do this, etc., I got it from Safety in the Markets Active Trader Program. I don't get paid anything for saying that. I'm not on some commission or some affiliate program, as you see a lot of people on YouTube doing today. But I was a student of Safety in the Market for many years and also a teacher at Safety in the Market for a period of time. And as someone who has been around the markets for 25 years and who's been studying the works of WD Gann for over 20 years, I can tell you that in terms of price forecasting and some form reading as well, in my opinion, that's a really, really good place to jumpstart this work for yourself. If you're not already making calls like this 65.14 top and nailing them and getting short at levels like that because you can see them coming in advance. So out of those three methods, and you can see all of them again on this chart page here, you've got an overbalance where you get a big pullback like that. Then you've got the first lower top as the market comes back up and retests the high there. That's an opportunity to trade. But in this case, the best way to jump in was knowing that price level in advance. And again, I gave a couple of clues for that in last week's episode of the Forex Form Guide, which was the 11th of May, 2025. Ideally, I'll short a top like this at the extreme high with that price forecast. If I miss that, I'll look for a first lower top. If I get that, I may also look at the first lower top to add to my position, depending on how that all unfolds. And if I miss both of those because I don't quite see the move coming or it comes a little bit early, well, I'll wait for an overbalance in price and then a pullback after that to tell me that the trend has changed. And then you start looking for more opportunities to enter. So when it comes to these market turns, I use cycle dates from WD Gann's novel, The Tunnel Through the Air, to give me my forecast dates to watch. As we approach each date, I look for price clusters first and foremost, and then an overbalance in price or time and the first higher bottom or first lower top forming after that. And once you've got a forecast date and one of these three things, then all you need is a low risk entry to get into the market. And that's as simple as trading is. You can make trading as complicated as you like, but at the end of the day, the best trades that I've taken tend to be the most obvious and clear ones using simple techniques and tactics that just work. And that's where I make most of my money from trading. If you're interested in going down the Gann research path, I have recorded the Tunnel Through the Air novel as an audiobook. You can find a playlist for that on this channel. At the end of the day, as you'll see each week in the Forex Form Guide, when I run through the Aussie dollar, the pound, the euro, and the yen, I'm always looking at a series of charts like this, and I'm looking for things like price clusters, like first high bottoms, first lower tops, like overbalances, to give me clues as to what the market is doing. Is it weak? Is it strong? Is it going up? Is it going down? That all comes under the heading of form reading, but it starts by being aware that you're not just going to trade and make decisions on one trading time frame. You have to look at the market as a series of time frames and make your decision based on multiple time frames. So just a few final thoughts to wrap this up. I focus on one forecast date at a time. Sometimes a turn will come in early or late and I'll miss it. Sometimes an inversion will occur. They happen a few times each year, and all that does is flip the polarity of your remaining forecast dates. But when that happens, I know when most of them are coming. Occasionally there are a few that are a little bit tricky, and if I miss one, it will throw me out and I'll miss that particular trade, so I just go to my next forecast date. I always just focus on one date at a time, and as we come into and out of each date, I'm lining up my swing charts, as I've showed you several times in this presentation, side by side, looking at all of those swing chart timeframes together to make a decision on what the market is doing. And finally, I know this goes without saying, but I always trade with a stop loss. Always. If you're serious about making trading a profitable profession, as Gann would say, you have to use stop losses and protect your risk. Put your ego aside. If you're wrong on the trade, take a small loss, move on to the next trade. That's all for this video. If you found some value in it, I'd appreciate it if you subscribed to the channel, clicked on the like button, and left a comment in the video. Liking and leaving a comment just shows the YouTube algorithm that you're engaging with the video, and if people engage with the video, it's more likely to be shown to other people. Otherwise, if people don't engage with the video, YouTube YouTube will think this is really boring, there's no value in here, and no one else will get to see it. Just a reminder that the Forex Form Guide is released at 7 p.m. every Sunday, where I look at the major currency pairs through the lens of WD-CAN analysis. That's all for this video. I hope that you found some value in it. Wishing you all the best for your trading. Have a great week, and bye for now.